Hi, it's Sandi Warner with Rhode and Warner Realty Group, and today we're going to talk a little bit about what the heck are mortgage rates doing. If you've been following along, and hey, if you've been following along, let me know where you're listening from. That would be fascinating for me. I'd just like to know if you're in Rhode Island, if you're out of Rhode Island and thinking about coming to Rhode Island, and how does this information compare with what you are learning in other states? So we've been talking for a while about mortgage rates and tracking them, and why are mortgage rates important? Well, mortgage rates are important because if you're going to go buy a home, when mortgage rates are low, you can purchase more home because it's costing you less money to borrow your money. Your interest payment, not your interest payment, but your mortgage payment, when you buy a house, you have a payment. It has four elements. It's principal, interest, property tax, and insurance. And if the rates are really high, your basic payment might only be $200 a month, but you could have another $100 in interest alone. Well, wouldn't be that high, but that's how those work together. If you're a seller, why do mortgage rates matter? Well, if mortgage rates go up, is that going to impact how many people are looking to purchase your home? And if you're selling, you got to go on and go somewhere else, right? So it might make it so that you can't buy something else. So let's jump right into it. What are mortgage rates doing so far? At the end of 2021, I think most experts agreed we were going to see a slight tick up in Q1 of 2022 and then continue to tick up over that. So as we come into 2022, this is a little quote from Sam Cater, who's the chief economist with Freddie Mac, who's one of the primary lending banks underwriters. And they said that mortgage rates have effectively been moving sideways despite the new increase in COVID cases. So in early 2022, we see this massive growth in Omicron, which sounds like a transformer to me. Why are the rates just going sideways? Well, here's what he says. He said it's because the incoming economic data suggests that the economy remains on firm ground, particularly cyclical industries like manufacturing and housing. Moreover, low interest rates and high asset valuations continue to drive consumer spending. So low interest rates, high valuations. Low interest rates mean that the influx of first-time home buyers are still getting really cheap money, and the high asset valuations means that people can sell their home and move on. So if you have a lot of equity in your home, it can encourage you to move on and move up, right? Or maybe move down, or maybe move to another state. While we do expect rates to rise, again, we're going back to Sam Cater here, the push of first-time home buyer demographic that's been propelling the purchase market will continue in 2022 and beyond, because they just keep looping into the system, right? They're just aging up into that point that not only are they buying their first homes, many of them are at the point that they're upgrading or they're moving out of cities, so on and so forth. So the next thing we want to look at is, so what are the actual rate projections? Are they changing? This looks very similar to what we've been seeing all year. So we're going to look at four talking head type people. We're going to look at Freddie Mac, Fannie Mae, MBA, which means Mortgage Bankers of America, and NAR, which means National Association of Realtors. So for Q1, we're seeing they're saying it's going to go to 3.3. So we're currently at 3.1-ish, so it's barely going to move. It does become slightly more expensive. The predictions are to go to 3.4 in Q2, 3.5 in Q3, and 3.7 in Q4. Now, the difference between 3.3 and 3.7 might make a difference for somebody who's really pushing it, but these are not giant leaps. So I don't really anticipate this to have a major impact on the market, although I do think it has the opportunity to squeeze out some buyers who might be stretching. So let's look at what mortgage rates have been doing since really, this is all the time of COVID, right? If we look at January of 2020, interest rates were up at 3.7. So if the powers or the projections are correct, we're just going to go back to where we were before COVID started. What will this increase in COVID infection rates with Omicron do? That'll be interesting. We need to keep an eye on that. So we did see that it went from 3.7 and went all the way down to in 2021. Remember the heady days of 2.5, 2.6? Wasn't that crazy? If you were one of the lucky ones that got that, you were going to tell that story for the rest of your life. I don't know if we'll ever see that again, but maybe. Currently, we're sort of trending over the last, since August and September, we're really trending at 3.1. We're getting slight fluctuations in this market. Remember, the federal government does not set mortgage rates, but they can enact policies that will tend to affect mortgage rates. And right now, it doesn't seem like they need to do that. What happens if mortgage rates go up? Adetta Cushy, who is the deputy chief economist at First American, had this to say. House prices and existing home sales have historically been resilient to rising mortgage rates. Well, what does that mean? Well, that means even if we do see this gradual increase, this ticking up over the next year or the next 4 quarters into the 3.7s, traditionally, when you look at the data, now this is not just her opinion, this is when they look at the data and they start, and I had a slide up previously that looked at this. If you look at the rise in home prices and the rise in mortgage rates, they don't correlate. They're not related to each other. So if people need to buy and we remain in this market, that is, there's not enough inventory and there's all these buyers that want to buy homes and there's nowhere to put them, it's not going to impact the market. So if you're a buyer, no real big changes for you coming on. You're just going to keep seeing the same inventory problem. Sorry about the sirens. If you are a seller, this looks really good for you. It means that maybe if you've been waiting out to see what COVID's going to do, given that we're not expecting to see such large appreciation or fast appreciation going into 2022, this might be a good time to put your home on the market. You've captured all that equity of that crazy rise in 2021. Current projections say that's probably not going to continue at such a breakneck pace in 2022, and maybe it's time for you to capture that equity and move up. I'm Sandi Warner with Warner Realty Group, making the complex simple.